Of Wealth Building Wednesday. Wealth Building Wednesday is brought to you by TRHT Selma. TRHT stands for Truth, Racial Healing, and Transformation. We are an initiative that is comprised of two nonprofit organizations based here in the historic city of Selma, Alabama, the Black Belt Community Foundation and the Selma Center for Nonviolence. TRHT Selma is funded by the W.K. Kellogg Foundation, and we are super excited to have our hand in providing basic information to get people started in building wealth. As many of you all know, and we talk about it all the time here on Wealth Building Wednesday, prioritizing and making sure that especially Black folks, right, are able to level the playing field when it comes to the wealth gap that exists in our country. In many spaces, financially, the debt for Black folks is much higher than our assets. And we want to help people get out of debt, to start to invest in ourselves, our families, and make sure that we're able to build not just personal wealth, but community wealth. And a part of that is making sure that we lay a strong foundation. And so, as we have shifted from a focus on small business ownership and entrepreneurship, we are excited to welcome back a wonderful, wonderful guest, Miss Sandy Hesley from Lifelines Counseling, located in Mobile, Alabama, but serving the entire state of Alabama as well as the Florida Panhandle. So, we are super excited to say good morning to you.
Good morning. I'm happy to be here always.
Yes, and we are always excited to have you here offering such a wealth of information. So tell a friend to tell a friend, y'all. TRHT Selma is here to stay. Wealth Building Wednesday is here to stay. We are excited about all the great information we have been able to offer thus far and looking super, super, super forward to offering even more. And so starting off, we'd like to jump on into the conversation. We only have 30 minutes to share the word. Look. So, Miss Sandy, first of all, I want to say I know that we were talking beforehand. A happy belated Mother's Day to you, and hope
Thank
that you
you.
had a wonderful weekend.
I did. I did. My son and my brother, they did an awesome job for the women in our family. So we really enjoyed ourselves.
That is wonderful. That is so, so great. So, about this thing called personal finance, right? And I kind of alluded to it in the intro just now, and us talking about the foundation that we really need to lay. So, like in the first quarter of the year, we focus primarily on small businesses and entrepreneurship, startups, if you will. And so now we're moving into conversations about our personal financial fitness, and wanted to just really lay some building blocks, if you will, some the cornerstones to strong financial fitness. So, like, what do you consider some of the cornerstones or some of the building blocks to establishing a strong personal financial plan?
Um, for me, you need to first off take a look at your financial situation.
Okay.
And a lot of times people, I don't think they realize how important that is. Where are you financially? How are you doing financially? Um, Take a look at your debt. What's good debt? What's bad debt? And an example is like a mortgage. That's a debt, but it's a good debt because it, grows and you're building equity, as a homeowner. So that's a good debt. So for me, you need to take a look at your debt and where you are. And one of the building blocks to me is saving. You have to start saving. For me, it's easier to have like a payroll deduction because if I never see it, I won't miss it. So, start saving. You have to start saving. Um, you have to have an emergency fund, have money set aside for unexpected events, for emergencies. You have to build credit for your future. Even if you have the cash available, do you want to deplete your savings to pay for something? That's where the credit piece comes in.
Mm.
Um, and good credit allow you to borrow money while receiving the best interest rate. So in a sense, you're saving that way. Another building block for me is investing. We need to learn how to invest, and you
Yeah.
need to start as early as you can. Investing in stocks, bonds, get your CD going, get you an IRA. You're building for your future. That's the whole thing here. And you want to make sure that you're comfortable as time goes on. And the best way to to take care of that is to start early, start investing. And one of the other building blocks, people don't really talk about it a lot, and I don't think some people see it as a building block, is insurance. That's a
Mm.
building block
Mm-hmm.
because, nobody really likes to talk about it, but it's important because it helps to protect you and your family from unexpected events. So
Yeah.
you need to make sure that you are, that's one of the building blocks, that you are properly insured, your home, your car, yourself. You have to make sure that you're properly insured. So those are for me some building blocks.
So now let's walk those blocks backwards. So what about for folks who say, well, you know what, I'm on a fixed income, or I have a limited income, and I don't necessarily know what it's going to be every month, right? I work for myself. I don't have enough money to pay for insurance.
Mm-hmm.
How can we, or what are some strategies, or even just common sense notions that we can deploy when it comes to making sure that we do things like have life insurance?
You can't afford not to have it.
Okay.
Some people say that they can't afford it, but you can't afford not to have it. Sit down and talk with a planner, a
Mm-hmm.
financial planner. And a lot of times they have them at at your bank.
Mm-hmm.
Start with your bank. Ask them if you can make an appointment to sit down and talk with a planner. You'd be surprised at the different types of insurance that are out there that can, meet your needs and not, you know, drain your pocket.
Break the bank. Mm-hmm.
But people just have to realize, and I can't stress that enough, is that you can't afford not to have it. Because when you get into a tight, something happens, then, and I use, their van, the company van is
Mm-hmm.
not insured. You get in an accident, it gets torn up. The other person didn't have insurance either. So now it's affecting your pocket because you don't have it to use, and it's got to sit over somewhere on a lot, rotting or rusting because you can't afford to get it fixed.
Right.
So, for me, that's the best way that I can say is that you can't afford not to have it.
Well, and I want to also encourage folks to consider your priorities, right? And when we think, and we're going to get to spending plans, but when we think about, if we want to know what a company or a city or a school district cares about when it comes to whatever you can see it indicated in their budget, right? Or
Mm-hmm.
their spending plan.
Yeah,
How are they spending the dollars?
yeah,
So if we're investing, if you will, more money in shoes and clothes and hair and
nails.
um things, right, right, the Baby Boy is a movie that gives the example. The gentleman talks about guns and butter, right?
Mm-hmm.
Guns being things that appreciate in value, and butter being things that you apply pressure to and it just melts away.
Yeah.
So shoes and all of those things, those that's butter. It's great if you have it,
Mm-hmm.
but what are the priorities? So these building blocks, and this is why this conversation is so important. These building blocks can help us build a strong financial foundation. And so when we set the example, then that means generationally, right? We have kids, we have our young people who are watching us make sure that we are doing payroll deductions and using that as a strategy to
Mm-hmm.
start saving without thinking about saving.
Yeah.
right? We see them, they can see us investing in life insurance and not even not having to have our children bear a burden when we are not properly insured.
Correct.
So now, how important is it for us to know exactly how much money we spend each month?
Knowing how much you're spending each month allows you to know where it's going and whether or not you're spending it wisely.
Okay.
If you don't know where your money is going, to me, there's no control there. And you need to have control over your finances. Don't let your finances control you. You
Mm,
control it. And by knowing where your money is going, it'll help you be able to budget better. To me, it's very important that you know where you stand debt wise, and that way you can make a plan to get out of debt if you're in too much debt, or you can say, well, you know what, I'm doing pretty good. I can afford to take some more of this money and slide it over here into savings, or I can afford to do this. You see what I'm saying? Keep track, and you have to have a plan. If you fail to plan, you plan to fail. So the best way to do that is to know each month, where's my money going. Look, if everybody had that, I'm gonna speak for me. If I
hmm.
had my way, I would be very comfortable at home right now, on the couch, feet up, catching up on some of my shows or watching shows or whatever. But I get up and I come to work. So if I'm,
Right.
putting forth that effort, I want to know where, what's happening with my money. I'm not going to
Hmm.
just work for nothing. I want to know what is going on with my money. And we need to know so that we can be better planners. We can be better investors and, things of that nature. So that's why it's important. And it's easy for you to know where your money is going, or it's easy for you to find out. Make sure, like with any kind of debts that you have, you're reviewing your monthly statements, making
Okay.
sure that that payment that you made went in, making sure that your balance is where it should be, and then look at the interest rate, because you might think, I thought my interest rate was 9.99. That was promotional. So now it
Hmm.
jumped up to 21. So we need to do something about that, to put you on alert. Look at your bank statements. See where your money is going. With most banks, you can go in and set, I want to say alarms, but you can set, I know, like with Regions, you could go in and put a cap on spending food. And once you
Hmm.
reach that cap, it will send you an alert. So you can look at your monthly statement to see where your money is going. And then for those computer geeks, build your chart, set up your chart on the computer and plug your
Hmm.
numbers in and review it monthly to see where you are.
You know what? I'm so glad that you're talking about the tools that we can use, including things like Excel, like you said, those of us who want to get on the computer and create spreadsheets, even if it means sitting down at your kitchen table,
Yeah.
right? Think about what grandmama and granddaddy used to do.
Mhm.
Sitting down at your kitchen table and just having a notebook and writing down, this is what we pay every month for mortgage or rent. This is what I
Mhm.
pay every month for food, like you said, assigning yourself, because there are some folks in our community who, instead of building the relationship with the bank and allowing their direct deposits to remain there, they actually are withdrawing the cash like the next
Yeah.
day and using cash to pay bills.
Yeah.
Now that does two things, and we've talked about one of them, around making sure that we're, one, building a relationship with the bank, because when you leave the money in the bank, you build a relationship with them and they have some things to go on, especially if you're going to try to apply for a mortgage. Look,
Yeah.
um but then two, credit. If you're paying for everything in cash, it may be harder to trace payments, because there's just not this digital
There's no
trail.
audit trail.
Yeah.
Hmm.
Yeah. So how? Whew, wow. Because this can really get deep, y'all. Because this is a transition for a lot of folks, but
Hmm.
it's going to make a difference when it comes to our financial futures. So, like, what about overall debt? Because when we consider not just rent and mortgage and things like that, but like our overall debt and how that impacts our ability, like our spending and buying power. Like, what does debt do for us? And knowing how much we owe, and considering, may have more debt than assets. What does that do for us when it comes to our spending or buying power?
It should cause you pause. It should cause you pause. That's
Okay.
what it should do. Because what when you have like more debt than X and then assets, it
Mm.
causes you to have what we call a negative net worth, and you don't want that because in all your net worth is what's owned minus what's owed. And you don't want to be negative, you want to be in the positive.
Mhm.
So another good example is, sometimes you buy a car, you say I'm upside down, I owe more than the
Mhm.
car's worth, and you never want to be in that position, never want to be in that position. So when you find yourself in that position, the best thing for you to do is to reevaluate your debt. And again, sit down, okay, look at what we have and look at paying off some of this debt, getting rid of some of this debt. And that's and it's going to impact your buying power because you go try and purchase something, you out of whack. You upside down. You can't afford this. You understand what I'm saying? And
Mhm.
that's when it's gonna again force you to go back to the table, sit down and figure out, okay, what can we do to get some of this debt paid down so that we can be right side up. Does that answer your question?
It does. So what are some strategies that we can use to kind of get that under control? Because if we and I put in the chat in the comments, and please, if you're watching, you all, please make sure that if you have any questions during this conversation, please feel free to post your questions. Because this is an engaging process, right? We want people to be able to pour into this conversation that we're having just as we're pouring into them. So please feel free to ask your questions. But wanted to just kind of wrap back around. I did put in the comments, your net worth is what we own, being what we owe being deducted from what we own,
Correct.
right?
Mm-hmm.
So when we consider that number, and the fact is that a negative net worth is actually why the wealth gap appears so large in the United States, is because the people who are the most wealthy don't have a whole lot of debt load. And for Black folks, we take on a lot of debt, y'all, and let's look, call a spade a spade. A lot of times we're taking on debt because we're comparing ourselves. We're
Mm-hmm.
looking on social media. We are looking at church. We're driving down the street and we see neighbors and family members, and we're purchasing things, right, and taking on a tremendous amount of debt, but don't own a whole lot of stuff,
Mm-hmm.
right? And so
Mm-hmm.
when we do that, we create that negative net worth. So you may be earning $100,000 a year, but if you're spending out
Mm-hmm.
122, eventually that's gonna catch up, right?
Mm-hmm.
Because you can put it on your credit card for only for but so long, because you got to
Mm-hmm.
keep up with that payment. Like you said, that 9% was an introductory,
Mm-hmm.
right? So now it's up to 21%, and you basically will never pay it off. So, like, when we owe more than we earn, what are some strategies that we can use to kind of help turn the tide on that?
I mean, it just it's going to involve you if you're married, you and your partner having a conversation. Y'all need to
Mhm.
come to the table. This is
Mhm.
where we are, but this is where we want to be. Write the vision and make it plain. And
All
then what
right.
Jeremiah said. So you got somewhere you want to be, but how are you going to get there if you don't sit down and because I'm a visual person, I want
Mhm.
to write down, okay, my goals, my aspirations, but I got to have a plan to get there. So
Mhm.
here we are, we're in our starter house, but we want to get that forever home. So how do we get there? So you're gonna have to sit down. You're gonna have to have a conversation. Um, about how you're spending. Look at your spending. Look at your spending habits. How are you spending? Are you impulsive? Look around. Is this stuff we bought? Is it stuff that we really needed or that we wanted? And the
Mm-hmm.
thing of it is that you got to realize that to get what you want, a lot of times comes with sacrifice. So you're going to have to make some sacrifices. If you really want it, you're going to have to make some sacrifices. And a lot of times that's not what we want to do. A lot of times we came up, we didn't have much. We see it over there. It's within my grasp. I'm going to get it. But sometimes you need to wait. Now's not
Mm-hmm.
the time. You need to wait. You'll be able to get it, and then you'll be able to get a better version of it if you just wait a little longer. So
Mm-hmm.
it boils down to the individual sitting down and deciding and mapping out where they are, where they want to be, and coming up with a plan to get there. And a lot of times, all it's going to take is just flat out self control.
Mm.
Self control. And when you get ready to make a purchase, do I really need? Is this a need or is this a want? You understand what I'm saying? And
Mm-hmm.
then you'll be able to move accordingly. So not trying to talk all around and all that, but look at your situation, look at paying down debt, and then you know what? It might come to a point where you might have to get a second job to supplement your income in order to get
Mm.
out of this debt and to get to where you're trying to get. Sometimes you have to in order to get your finances under control and get things in order. I've known several people that had to take on a second job so that they could use those funds to try and pay down debt and get their finances back under control. So I know I was talking around and around, but
No, but you are dropping gems, and this is truly what we set out to do with Wealth Building Wednesday, is to drop those nuggets, right? So that
mm-hmm,
as we're having these conversations, it's causing people to, like you said, take pause, to think
mm-hmm,
about, well, like, what are my spending habits? Am I investing? Am I buying groceries and going to restaurants every day, right?
mm-hmm.
And ending up throwing away hundreds of dollars of food. So now when it comes to, and we talked about debt, like the impact that our credit has on our financial future. I've heard plenty of folks say credit is king. How true is that, and how does our credit impact our financial future?
I mean, credit scores play a huge role in your financial life. It's no way to get around it. And and what they really do is they help lenders decide whether or not they need to take a risk on you.
Hmm.
Okay. And your score can mean this loan is approved or it's denied. And it is a factor in how much, if it is approved, how much interest am I going to pay on this debt? So, which can make a debt more or less expensive. So, it's really just that simple. You know, credit plays a huge part in your financial future. There's no way to get around it. A lot of people like to think, oh, I'll just pay cash. You can only pay cash for everything for so long. And
Hmm.
then eventually you're going to have to get some credit some way. So, how you handle your credit determines your financial future. If you
So,
handle it good, you're going to have access to the good rates, good terms, and all of that. If you handle it poorly, the other way.
So I quickly want to go back to something you just said about these interest rates and long term, because I don't know that a lot of folks, because I didn't know it. I went through a class a while back, and she actually, the young lady had some charts and showed the exact same car, right? And what somebody with good credit, which is I
Mm-hmm.
think a score, I think it actually depends on the lender, how that actually ends up working out.
Yeah.
But how the difference between the monthly payment for the exact same car, but because of the credit score, there was like a $200 to $300 per month difference.
Yes,
If it had
ma'am.
just been like a $200 difference per month, you're talking about $2,400 per year.
Yes, ma'am.
what can we do with $2,000, right? So
Yeah.
when she talks about the difference in what you end up paying because of a credit score, it really can matter.
And I think people need to see that. And that's what we try and teach them when we have like our home buyers class.
Hmm.
You know, you have $1,000 credit card that you charge up to the limit. Interest rate is, let's say, 25% or something like that. The difference of how long you pay that $1,000, you can pay that $1,000 I don't know how many times
Yeah.
over the course of 5 years, versus somebody that they have a credit card. That's why we always encourage you, don't go over the 25% credit utilization of a
Hmm.
card, you know, and pay it off each month if you can. Because when you compare what you're saving in interest, it's mind boggling. And that's what we try and teach people. People get those credit cards and they just think, oh, free money, free money. No, it's costing you big time.
Hmm. So if we have good credit, how do we guard that credit?
Guard it with your life. You gotta use debt wisely.
Okay.
Do I really need this? Is this a need, a necessity, or is this a want? And even if it's a want, I'm gonna give you some grace. Okay? Even if it's a want, can I pay it off by next month? You understand? To
Hmm.
me, my shoes don't look good when I'm still paying for them 3 months down the line. They just don't look good to me.
Right.
So I don't want to be paying my shoes for no 3, 4 months, on a pair of shoes. So my point is, you have to use your credit wisely and guard it. Pay your bills on time. Pay all your bills on time. Pay them as agreed on time. Pay more than a minimum if you can, and guard your credit. Don't be so quick to go co-sign for nobody. That's a whole nother issue.
Oh,
But
jeez. Yeah.
no,
Yeah.
don't be so quick, but guard it. But that's the whole thing, and it's really simple. Pay your debt on time, pay them as agreed, and you'll be fine.
And I really listen, y'all. I know for some of us, because of how we have been taught to use money, not that it's a tool, but that we should, look, I have a friend of mine who says, look, sometimes it seems like we're allergic to it, like we just want to get rid of it. Because as
Mhm.
soon as we get something, we want to put it in the street. But y'all, we've got to learn how to make sure that we're not just throwing the money out to purchase, again, the butter of life, that we're
Mhm.
actually accumulating and not hoarding money, but putting the money to work,
Mhm.
right? Because saving is an approach, but then there's also saving with a goal, right?
Yeah.
And putting that money to work. When you purchase a home, that's putting that money to work. When you invest in the stock market, that's putting that money to work.
Mhm.
Now, it's not an overnight, right, payday, if you will, but it's putting the money to work. So now,
Mhm.
what about those of us who may have average or bad credit? So like, what does that mean, and what are some like the very basic things that we can do? And I know we only have a few minutes left, but some very basic things we can do like today to start turning the tide on a low credit score.
And I like to try and use credit challenged.
Okay.
Let's not
Okay.
say it's not, bad, bad.
Bad credit, right?
Let's say challenged.
Okay.
The best way to handle it is to focus on what you already have. A lot of people
Okay.
think, oh, my credit is jacked. I'm just gonna go out and get me another credit card or get me a card. No, the best a lot of times focusing on what you already have so that you can rectify or fix. Okay, and meaning if you have charge-offs, collections, reach out to those merchants or those creditors. Say, hey, can we make an agreement to pay this debt, and if I pay it, will you delete it? We call it pay it and delete. Get that
Okay.
off your credit. Um, you are behind, get your debt caught up. You know what I'm saying? And then get on right track of paying that debt on time. Now, it might come a time where you need to get a secured card to help start rebuilding because you had just mainly collections and you have no credit, then go to your local bank and see about getting a secured credit card to try and help start rebuilding your credit. But the important thing is to focus on what you already have in your credit. Don't ignore it. Don't act like it's going to go anywhere. Address it. Get with the creditors, make arrangements, and ask them if they'll delete it once you pay it off,
Okay.
and get your stuff caught up.
Well, listen, let's start with that today. Let's figure out what we owe y'all if you are experiencing a challenge with your credit. Okay, to use Miss Hesley's wording, if you're experiencing a challenge with your credit, start today and focus on what you need to fix today. Accumulating more debt is not going to increase your wealth, y'all.
Mm-mm.
We got to stop competing with each other and see each other as a network, right? To establish stronger net worth.
Mm-hmm.
And that's what Wealth Building Wednesday is all about. If you have any questions, y'all, please continue to comment. We do go back and check these messages. You can also message either the Selma Center for Nonviolence or the Black Belt Community Foundation. If you have any topics or guests that you would like to suggest, we are looking forward to continuing to share with you each and every Wednesday on Wealth Building Wednesday. We broadcast live on Facebook and on YouTube, 10 until 10:30 a.m. Central Standard Time. And the audio is rebroadcast on our media partner WBFZ 105.3 at 1:30 Central Standard Time. So we always look forward to having you all join us. We thank you all for tuning in and look forward to seeing you on the next Wealth Building Wednesday.
Y'all have a good day.
Thank you.